learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in on May 22nd, 2020, and unemployment moved the stock market. This is something I think is very important, especially with some of the other news that happened today, but this was the first time that we saw unemployment data come out in the midst of this whole 30 million unemployed, Great Depression, all that. But this is the first time now where we've seen the market close red, and 1/3% on the S&P 500 is pretty sizable. So this was really important, along with the other news that we saw today with other data that we have coming out, and then some other comments by Trump after hours, and then what's happening with the economy and stuff like that. But then also, we have more updates from China that I want to go over, and I'm even expecting something possibly tomorrow after hours, or even over the weekend. I'm going to discuss that. But there was a few decent moves today, and then we also had Palo Alto Networks and NVDA, and those kind of even signal an end to the earnings season in a way. So we have a lot to talk about. I even have some plays that I'm going to be looking at. We're going to go over the NVIDIA plays, but as well as what to be watching in the morning. Again, it's going to be really, really dependent on news. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $3.99. It costs you nothing to join. YouTube.com/thestockmarket. You could post the plays, see the plays. You could ask questions, socialize, but socialize with the market. Have you heard philosophy? Goodness, but we hope to see you there. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes, anything, post that below. Source that info. How did you play in the video? What are you looking at? If I missed anything on this watch list, there's some important news, anything, post that below. And you also have a BFTC tomorrow. That is Bring a Friend to Colt Day, and that is very important. So hopefully you guys bring a friend to Colt Day. And, you know, give a special shout out to your friend who brought you to Colt Day. If you're in the Colt and maybe they didn't get TLT and now they're not in the Colt or whatever it may be, but show some love, baby. God bless y'all. So right off the bat, BAFTC, we talked about that. Don't miss that. But this was the first bad employment day and that we went red. And now this is important because this could show cracks in the expectation. So a lot of people were caught up. Bad data, the market's not moving. Literally every single bad jobs report in the midst of coronavirus, it has led to the stock market going up. This has perplexed a lot of people. How is everybody saying the economy is going to be bad? The data is bad. This is the worst unemployment ever, but the market loves it at all-time highs. It's very fascinating to some people, but now this has to do with future expectations. Every stock, even the S&P 500, it is not only showing you the current value today, and that's not what the price is. It is pricing in future expectations. So when people have expectations and they know it's bad, it's really hard to surprise them, or they're, once they kind of get the reality of this situation, then they will react. But now this is important because we've had a few months to reasonably have expectations now. So that's why when these reports were coming out, people weren't too surprised. But now if the numbers start coming in even worse than those expectations, that is starting to hint that some of these other data points that we've been tracking that haven't caused responses, they didn't cause a response now, but now in the future, if they keep coming out and now analysts and everybody's kind of doesn't know what to expect, or it really comes in a lot worse than expected, that will be the problem. That is when the volatility will start. So that is important. And then again, we've been talking about this. This even has to do with the main play that we made today. And again, we're early on this, but there's more China escalation. So I'm going to talk this in two segments. But the first part, the House came back today and they didn't reject the Senate bill. They didn't pass it, but they came back and they gave input. So now the House is even looking for more stuff. And they're pretty much saying that banks could be held responsible. So Hsbc, Deutsche Bank, those are more of the sketchier banks, and the ones that deal mainly even with Asia. So Hsbc, that's why we got to put on that. We'll go over that play. But that is the first thing that they did, and just the fact that they didn't reject it is important. And then now you could see what they're kind of doing. The input they're giving, instead of going directly at China, it's kind of like a warning shot, is kind of what the House is suggesting, that you go after the people participating with them, so then you could kind of choke it off and let them know you're serious, but as opposed to making a direct action against the country itself. But they still have to, it is still escalation in China and a direct action nonetheless. Please don't get that confused, but it's not as bad, more or less, even from the optics of it. But even then, though, that is even an escalation of the matter. So we will see. Watch that. That was the important part of that news today. But then now I'm expecting bad China news after hours tomorrow. So Trump was talking about after hours. Someone asked him, and he pretty much said at the appropriate time they have something. And again, there was also actions made by China today that is pretty much going to control Hong Kong. So pretty much in the midst of this virus stuff, they're passing bills right now in China that is going to help them to prevent what happened in Hong Kong last time, to get more control. And it's a very aggressive maneuver. And that's why, you know, people are reacting to that, as well as the stuff we've already been talking about. Don't forget, there's this China escalation, the delisting of stocks. But then remember, we banned the pensions a few weeks ago. Remember what BlackRock CEO, I think it was Finch, what he said too. So again, it's heating up, but it's not at the boiling point. But this is what I want to see. So be on the lookout for that. And like I'm saying, it could happen after hours tomorrow on Friday. That would just make sense considering some of the talks and how we're seeing it, or over the weekend in the morning. But I'm not really too confident. So if I had to give a confidence interval, it wouldn't be a really, really high one. And why I say this is because I've been wrong a lot of this. You know, I've been right on what's going on. I've been noticing the seeds, but the timing and understanding that's the key. And it's not that important. It's not like, as you know, you see how we're scaled into these plays. It's nice to know. So again, even though I'm saying this, and why I would say is that even if it doesn't happen, it's not too important, but I'm trying to gauge it. And at the same time, though, I don't want it to be like crying wolf, because this situation is important. So naturally, I understand why it could take a few extra weeks. They could move really slow with this. It's a big deal. So that's the key with what we see. But again, the faster it happens, the more that signals escalation. So when you move quickly and you react, that they're escalating the situation, as opposed to, okay, well, it's not that bad. We could sit on it. Let's wait. Let's decide. You know, we have other things we need to focus on. So let's see how that plays out. So there was that. And then finally, even with like Trump and everything, there was just a sober reality moving forward. Again, this has to do with the unemployment and how this affected the market today. But Trump even said after hours, if there's a second wave, they're not going to shut the government down or the country down again. And then even McConnell even said that there will be no additional unemployment benefits with anything happening here. And then finally, again, like we said, that unemployment, it's all of this is kind of pointing towards a sober reality moving forward, where it's like we reacted in the beginning, we did all this stuff, but now we'll see how the data comes out. But people might be falling back, and it's kind of weird to think about. And this is maybe even just from a social perspective, but to watch how people are going to react to this now as the economy reopens. Now you got the first round of stimulus. You know, everybody was like united together and all this, but now they're like, well, we can't give you more benefits with this. And, you know, we shut down the first time in this, but, you know, we can't do it now. It's like, that's what I want to see. And again, this will tell us a little bit about the tone for future policy, and again, how that will affect stocks and everything. I really want to see if it does it kind of turn this, okay, everybody's on their own type thing, or we will see, is it because we've had, again, a lot of support for the last 3 to 5 months. I mean, a tremendous degree never seen before, or, you know, something you would see more in China. But don't get me started. So that is pretty much it. We'll see. It's going to be a Friday, a froggy Friday at that. You better bring a friend of Cote. I wouldn't be surprised to see some crazy news move the markets, and then I wouldn't really be surprised to not see anything else. But we saw how this week played out. Let's see how this plays out again. We'll see if we get a down Friday, if it leads to a down Monday. But it's going to be fun. I think there's still a lot of opportunities, again, the earnings and all that. So I hope you guys are ready. But let us get into the plays. So right off the bat, I'll give you the 3 stocks quite simply. One, Hsbc, but keep this in the context of we have been purchasing all of these plays related to this China news. So any of these plays, I'm making sure I got time, but I got this one, Hsbc September. So here is the small account. Where is it? What is it? I didn't know which one it was. Yeah, that one. September 15 put. I grabbed one of them at 20 bucks. They closed there at 27, but it's getting time. All these plays, I'm making sure we got time. Then we did the NVDA puts. I'm going to go over those, but the other plays I'm going to want to watch for tomorrow, again, if it's not any of those Chinese plays, it's going to be the Palo Alto and NVIDIA continuations. Now, continuation, I might set up a NVIDIA, but I'm expecting the big move to come next week. So if you guys, it's moving a lot like the other earnings. Again, they had a big move. They kind of came down a little bit, and we'll go over the plays that we made specifically. We did a premium sell and bought some puts, but I think that one's going to take time to develop. So depending on how it moves, I might set up a play on Friday to prepare for the weekend or for the next week. But then at the same time, if it's not too appealing, then I'll just wait over the weekend. But then also Palo Alto, they had a bigger surprise and they're moving a little bit bigger. So if anything's going to have a continuation, it might be Palo Alto. Otherwise, we're going to be writing out the other plays. I think Spotify, Shopify, we're still in those. Those have been great. And then we made another play today. I got that Yang contract. So you guys remember we've been talking about that. I brought this one up yesterday. I got Yang, and this is the Chinese ETF, and I spent a little bit more. So this one wasn't a small account play, and we'll talk about the small account when I go to the NVDAs, but I grabbed a January 15th for a 51 call for $6.90. So it's pretty expensive. It ended up going up a little bit throughout the day. But the thing about this could even set up one of those covered call plays is kind of what I'm looking for. So I have the call now. I'm hoping that it goes up if Yang does shoot up. And again, the timing on it. And so this is like an inverse of China stocks, but again, I said this yesterday, it's really, really linked to the S&P 500. So you might not get that effect where some China stocks might go down, but if the S&P doesn't go down, Yang might be a little bit tricky there. But the idea is up until January, if there is any sort of blowout or escalation and that does increase fear, then we will be able to profit off this. And then the best part is I'll be able to ghetto spread it. And then if it shoots up and the contract premiums shoot up faster than the stock, that is where we're going to look to do the yee. So check out that SCO covered call play. We have a video on it. It's a really awesome play, and I'm still holding that play too. So VVC. So there was those plays, and now I did the NVIDIA credit spread. So this is, well, I did two things with NVIDIA for earnings. So one, I grabbed one of these puts on the small account, and this is something, look at, I'm negative 9 cents. They let me go negative. I can't believe they did that. That's crazy. So I have no cash, and this is, I gambled on this. I told you guys, again, I know I have a deposit coming in 9 days, and I know I'm going to make another deposit. So if you're not in that situation, make sure you don't ever do this with the cash, because even though the account's at $4.98, this is what I'm talking about. Options expire. They lose value quickly. We will lose on everything. So you have to keep that in mind. Here's some good examples from the last time again, RIP. So I grabbed that play, but then I also did the credit spread. So this is what I was talking about. It's literally what I brought up on the watch list yesterday. I executed it where I sold those in the money credit spreads for June. So it's pretty much a bearish neutral play, even with the puts. So I got the puts just in case, you know, NVIDIA had a big run up. I grabbed one of these puts. And again, I grabbed other plays too on the other account that I'll show you, but I'm talking even in this sense. Grabbed one of these. I spent $50 because it was 2 standard deviations. I could have gotten away not spending as much money. You see, again, I got suckered into it because it's an earnings, it's a gamble. Remember the logic. It's like, yeah, $40 would make me, it'd be a good play, but I could have gone for a $20 one, and then I may have not made as much with the $20 one. But if I'm wrong on the earnings gamble, then I would have benefited off that. I would have actually not had negative 9 cents anymore. So I got this in the hopes that, or in the event there was a big move down because NVIDIA moved so much, but then the credit spread sold the in the money one, and basically you short the 330 call and then you buy the 335 call. I got a net credit of $300. So the difference between these strike prices is $500. The collateral is $500, but since you collect $300 up front, your max risk is $200. So pretty much by June 19th, and that's the difference. This wasn't a weekly. This wasn't betting that by this day, and this was a 40% probability play. So I risked a little bit more. I'm not going to get as much, but the premiums were high. I wanted to use that to my advantage, but it's kind of like a coin toss with a little bit less advantageousness. But pretty much, I need NVIDIA to close below 330. If it closes below 330, I make 300. If it closes higher than 335 or pretty much anything above 333, I lose money. So at 333, because I got $300 credit, so add $3 there, my break even is 333. So if it closes at 333, I simply lose nothing. But if anything below 333, I profit, and then if it's at expiration below 333, you'll make the whole thing. But anything above 333 and then now 335, I would lose the 200. But I pretty much have till June 19th. So this is what I said yesterday when we were talking about this earnings play. The whole idea that I had in mind here was that it had this pre-earnings run up, and I'm pretty much saying that even if it shot up a lot, I was saying in the next month, I pretty much think it's going to stay somewhere in this range. I don't know if it's going to necessarily skyrocket up and do something crazy, but I could be wrong. But at that event, I would lose on the put play and then the defined risk on that credit spread. So there was that credit spread. It was a little bit bigger, and again, it led me to even not having enough cash. But the idea is that was a 40% probability play, and I could pretty much almost double the account with that, with $300. So don't get it twisted. It is, again, and that one was an in the money one, so it wasn't as safe, and I did risk a lot of money, but relatively speaking, it has more safety than that put, and we'll see how that plays out. But there was that, and then I did another play here on the Tasty. So here we are to the Tasty, slightly depleting away there, but we still good. Remember, we even got a little bit of shares on there, but these were the plays that I made here. I did that NVDA, same one. So I did 2 of them. I like to play, and I did this one earlier to set a place marker throughout the day. So if you watch live, you should go watch that recap, and you could see kind of the logic behind that. But then I got 2 of these, so I spent a little bit more. So I executed these at the same time. You know, why did I go with the 275s? These were closer, but when I was at the time, the chains were tripping out, and why I ended up choosing this one was because I had more money in this account. So I wanted to play NVIDIA. I threw out $100 there. We risked another 200 there, so like 500 total, and then 200 on the other one, and then another, what, $40. But the idea was literally, and hopefully you guys are paying attention, are able to see, it's the difference between managing that the accounts and the account sizes and which plays you are going to have to play. In this case, I was literally confined to only being able to play that 270, and if I really should have been smarter, I should have bought a shittier play for a lot less money, but I didn't. So like, again, we'll see tomorrow. Hopefully NVIDIA ends up dropping, but it didn't have too crazy of an effect. See, it's at 348, so even if it drops, that's 2.8%. That's not enough. Remember, it was pricing in about 7%. So if you sold premium, especially if you sold the Iron Condor, you'd win. So we might benefit off of that spread we sold, but it has time, and it's still in the money. So technically, you don't really benefit as much. That's the risk of selling in the money credit spread. So keep that in mind, but that is pretty much it. Again, I'm going to watch TLT. There is other companies. I mean, besides that, I'm just going to pay attention to the continuation plays. Palo Alto, I really, really like. Again, we've seen this move before. I think we've played Palo Alto before. AMD, again, they kind of reacted. They could be a good Friday sympathy play to NVIDIA. And then Shopify and Spotify. I love both of them. They're both holding up. Again, Spotify came close to that breakout, but if it could do it on a Friday, again, the volume just keeps getting better with it. There was even more news that kind of dropped them here. It was like Apple competition news, but I thought it was good news, but the market actually took it negatively, so we'll see. But that's pretty much it. Again, it's going to be really, really chill tomorrow. I think it's going to be a lot, mainly news-driven, so hopefully you're there. You got your scream alerts, but at the end of the day, I know what I'm really going to focus on. We're going to see these credit spreads. We're in the continuations. We're slowing the game down, but Friday has yet to – it hasn't disappointed us lately with some of the news and companies, so let's get it, baby. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to keep it simple, baby. Simple is sophisticated. Sophisticated is simple, baby. I hope you are ready. I hope you control the budget. I hope you're learning from these plays, and hopefully you understand your plan and have a plan. And again, balance and budget. Even if I use my whole cash balance, you have to know what you're comfortable with and what you got prepared. You know your finances better than everybody else, but I'm telling you now, don't have to chase all these, because if you could survive till the end of the year, there's going to be an opportunity. Have you heard about TLT? I don't know. I'll talk about it later. But the code loves you. I love you. I'm going to see you in the morning. Let's go.